Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.8%. There on the S&P Nasdaq 1.7%, semiconductor 1.2, Dow 1.4, Russell 2000, transport, banks, energy, biotech, healthcare, home buildings, utilities, retail, emerging market, every single sectors are red today. Bitcoin, gold, silver, miners are also dollar up, oil down, treasury bond down. VIX popped about 8%. There, let's do the S&P 500 ETF. Spider! 65-minute chart. Here's so this is what we closed on Friday. Looks like we actually saw another down gap this morning, but this time around bulls were not able to fill that down gap. So as you can see, that down gap still open as of today, and this is going to be a problem and has been the problem for the day, because with that downturn, you can see the micro-term moving average is now supporting the sellers. So a little bit of fluctuation on the first and second hour, but once we lost that prior support right here, so if anybody chased long anywhere in this vicinity, they're getting all stopped out and panic here in the last several hours. So we did continue to see lower prices. We got close to that my short-term moving average here, right? That short-term moving average was acting as support just about a couple weeks ago, and that's the vicinity. Looks like market is definitely aware of that vicinity. So you can see that's the only green candle we're seeing right here on the last hour, right? Because all throughout the day we cannot able to find any green candles except the last hour. So definitely, as you know, sellers are kind of being aware of this level around 397. This is 397, 399 area. So we have a little bit of a pop on the last hour, but sentiment in the micro term is definitely bearish. Perfect. Now that micro term moving average is curling down. Last time when we did see that gap down, and then we saw that downturn for the day, this market continued to see some volatilities and lower prices for about a day or two, as we can see right here. But then short-term moving average was there to prop the market up. So that's right here at 397. If we lose that level and bears really decide to be more furious in this vicinity, we're going to see about 394, right? That's going to be the next level support right here at 394. And my midterm moving average currently residing in that vicinity. Now, obviously, if you're a buyer and you're desperately seeking for higher prices, well, the micro term at 401 and my current pivot is at 402. So that's the level you need to reclaim. And then obviously you need to get up here and fill this down gap. Let's check out that oscillator. So you can see we talked about this last week, that with this bearish divergence in the picture, higher high in the price action, and not to mention this down gap, right, from September, it wasn't fully filled. And I remember I emphatically emphasize the fact that if this down gap doesn't get fully filled, that's gonna be a problem for the bulls. And you can see already things gotten very hectic in the last several days. And on top of that, we do have bearish divergence, higher high on the price action, lower high on the oscillator. So now definitely that oscillator has rolled over, and then we're getting into this vicinity now. But you can see that oscillator is not oversold yet. We potentially got another day or two energy left here. So either the buyers can pull something in this short-term moving average vicinity and pop it quickly, at least to about 402. Or if we see a continuation, I can definitely see 394 and 393. I'm gonna come back for you. We'll reassess the situation Enjoy your evening and good luck trading tomorrow.